What we have in Botswana Diamonds is we have, from a geological perspective, the most prospective area on the planet. We show progress in terms of our exploration projects, from nothing through to finding a kimberlite, through to recovering diamonds, and doing this as fast and as cheaply as we possibly can.
You're 7 years in the making. At the moment, it's hard to see why I would come into your company. I want reasons to come in to invest in you because I think I'm going to leave my money there for a year, 2 years, 3 years. What are you telling people?
Hello and welcome to Crux Investor. First of all, thank you so much for watching this video. If you like it, give us a thumbs up and do leave your comments below. It really helps us try and understand the sorts of questions and thoughts and ideas that you have with regards to companies and the things that you're looking from us. If you haven't already done so, please click the button in the corner of this screen to subscribe to our YouTube channel. And of course, if you want to see more videos like this, click the notification bell. We spoke earlier today to James Campbell, who is the MD of Botswana Diamonds. They're a small £3 million market cap company on AIM. We talked to him about the macro story and thesis for diamonds. It's not a space we know particularly well, but he quite kindly talks us through that. And then we get into the company itself. They're an explorer, very early stage. They do sit on a number of licenses and permits in Botswana, which is great. And we are trying to understand where we as investors should step in and see, well, or at least maximize our returns. And we look for what those catalyst events this year and next might be to generate change in that share price. But take a look in the description below. We talk about those topics and many others. If you're interested in something in particular, click on the relevant timestamp and that'll take you to that part of the video. But I hope you enjoy what James had to say.
Good morning, James. How are you, sir?
I'm very good indeed, Matthew, and how are you?
Not too bad, not too bad, not too bad. Now, you're speaking to us from sunny South Africa at the moment. You holed up at home, avoiding COVID-19 and coronavirus, are you?
Absolutely, Matthew. We've been under lockdown now for 11 days, and we haven't left the property in 11 days, absolutely adhering to the government's mandate to keep safe.
Good man. That's what we like to hear. Now, why don't we kick off by you giving us a 1 minute overview on Botswana Diamonds, and then we'll get into some questions.
Botswana Diamonds PLC is a London AIM and Botswana Stock Exchange listed company focused on diamond exploration and development projects in Southern Africa, being Botswana, South Africa, and Zimbabwe. Over a third of the world's diamonds are mined in this region. And we view the region as being highly prospective and thus our activity and our focus on Southern Africa.
Fantastic. Thanks for that summary. Now, like me, I think a lot of our viewers are probably not that au fait with diamonds. You know, there's more fashionable commodities out there. You know, it's gold, and therefore they're more easily understood because there's a lot more information. So diamonds is something that I would like your help to try and understand. So let's start with the macro first. Can you sort of explain, you know, the world of diamonds as it is today, pertaining to public market diamond companies? How many of them are there? What sort of size are they? Where are they?
I think if I could, Matthew, I'll just start off with a macroeconomic perspective on why diamonds.
Perfect.
Of course, if you are engaged, or planning to be engaged, or married, or planning to be married, you will buy a diamond. And typically, in terms of that rite of passage from an engagement perspective, you'll spend between 3 or 4 months gross salary on a diamond as a symbol of your love for your partner. And this is something which is very consistent around the world, not just in the UK and in Europe, but very much so in the United States, China, India, and the Far East. So that is where the demand comes. And the second little piece of interesting information is that once you've bought your first diamond, you're statistically more likely to buy another diamond. And once you've bought a second diamond, you are even more likely to buy a third diamond. So that is where the main market actually sits. It's in your engagement rings, and it's then in your rites of passage, be it a a marriage ceremony, a birthday, a wedding anniversary, or even if you are a single person, basically giving yourself something. And Chris Evert Lloyd and the tennis bracelet was a wonderful example of a very successful lady giving herself something to represent her own success. And that's also very, very common amongst single ladies. So what feeds into that, to answer your question directly, Matthew, it is the public diamond companies. The two major diamond companies in the world, which probably produce between them about 2/3 of the world diamonds, are De Beers and their partnerships with the government of Botswana called Debswana, and their partnership with the government of Namibia and called Namdeb. So they have operations in Botswana, in Namibia, and in South Africa, and they also have operations in Canada. And they produce the largest amount of diamonds by carat, and that's how we measure the weight of a diamond, and a carat is 0.2 of a gram. The largest producer by value is Alrosa, which is a Russian firm. It is publicly listed too, but not a vast amount of shares. They're very much focused on Russia, but they also have an operation called Katoka in Angola itself. And then the balance of the third or 40% of global diamond production comes from a number of mid-tier companies and smaller companies. And probably the largest of the mid-tier companies are Petra Diamonds, which is active in South Africa and Tanzania, Gem Diamonds, which is active in Lesotho and Botswana, and Lucara Diamond, which is active in Botswana. There are other producers such as Mountain Province, Dominion Diamond Corporation, and others who are active in Canada. So the two stock exchanges which house the majority of the mid-tier diamond companies are, of course, the London Stock Exchange and the Toronto Stock Exchange in Canada. And then you have the small producers and the explorers, which actually sit below that, but they're aspirant, possibly producers, but in terms of global diamond production, they're relatively insignificant.
Wow, there you go. That's a great overview.
I'm not sure if I overdid that one. Yeah.
No, fantastic. I mean, the question I did ask there, you talk about jewelry, diamonds for jewelry. And sorry if we bounce around a bit here, but you just made me think. What about industrial diamonds? Where do they sit in the scheme of things? Because I remember sitting in an airport in Switzerland in a secure compound area looking at $70 million worth of diamonds in various bags of stones of various sizes, but the bulk of them seem to be for industrial use. So where do they sit in the mix?
From a value perspective, it's relatively small. And the majority of the industrial diamonds are produced on industrial presses and not out of the primary natural diamond source being kimberlites. And these are used in all forms of cutting tools, drilling bits, lathes, and the such like. Very, very common, very, very small, but chiefly generated by industrial presses out of Ireland, out of the United States, out of Iceland, and actually elsewhere. But from a value perspective, it's relatively insignificant when compared to the jewelry industry. However, there are very interesting other uses beginning to kind of creep in to these kind of diamonds, such as computer chips, which have long been made out of silica and other things. And diamonds is a fantastic conductor. So maybe going into the future, diamonds could well be the computer chip of choice too as well.
Okay, so let's, and can you give, I did read a piece that you did, and I think it's on your website, called Financing Diamond Projects. So you just have a lot of the economics behind diamonds discussed in there. But can you give us a sort of a financial forecast as to what the market looks like according to your version of the world?
If I could answer that maybe in two parts, Matthew. The first part is from a financing perspective, and the second part is trying to get a crystal ball out in terms of where the future will be. From a financing perspective, much changed post the global financial crisis in 2009. Up until that point, you had large equity firms such as BlackRock and JP Morgan and others who would always take a 10% or thereabout slug of any diamond exploration company which they viewed had particular merit. And from that, they were able to actually get a good slice of the kind of diamond income that would come through from an uplift in those growth stocks. Post 2009, the market changed considerably, the risk profile changed significantly, and the funding of diamond juniors, which has chiefly been the engine of exploration growth around the world, essentially dried up from those firms. And my chairman, Dr. John Teeling, has got a great saying in that post 2009, it essentially became the role of the 3 Fs: friends, families, and fools, who would actually fund these diamond exploration ventures. And so it's become a lot tougher to fund this particular sector. But notwithstanding that, there is still support behind it. And in particular, things such as crowdfunding, royalty streaming, and other means are used to actually fund it. So going on to the second part of your question about a crystal ball going forward. Clearly, with the global pandemic around COVID-19 and the coronavirus, there is a major transient event which is taking place around the world at the moment. Many mines have actually stopped production. Those people with discretionary income are obviously holding on to that income because most people, everybody is uncertain about where the future will be. So that has actually had, unsurprisingly, a downward trend on diamond prices and a downward trend on diamond production. So I would not want to actually, it's way out of my field, as to kind of forecast in the short to medium term as to whether there will be a V-shaped recovery, a U-shaped recovery, a recession or a depression. That's well beyond the remit of somebody like myself. But the one thing that I can say is from a long-term perspective, and that's certainly what we look at in the diamond market, is that there are fewer and fewer diamond mines being discovered. And certainly if one looks at a generational timeline, we still think that people will buy diamonds to celebrate a rite of passage. We still believe that they will be natural diamonds and they won't be replaced by a synthetic alternative. And with that divergence over time in terms of supply and demand, the only way that that can converge is by diamond prices exhibiting real growth over a long period of time. But that long period of time, I don't really know what that would be because of where we are at the moment, and we're still not on the downside of the pandemic as we see it.
Because I mean, you talk in your PowerPoint about the fact that it is harder for diamond explorers to get funded at the 3 Fs. That's a good one, probably applicable in a few commodities, and the junior funds and institutions moving away from funding junior exploration companies. I mean, that's been a trend of the last 5 years. You think was there less money around and less interest around and less funding for diamond companies like yourselves, you'd think that that would be a good thing for the overall pricing in the marketplace, wouldn't you? You suspect, well, there's less being found, there's a bit more rarity, less supply in the market, less certainty around supply in the market going forward if the growth is as you say. That would be good for you, wouldn't it?
Absolutely, Matthew, but I think one must look at the timing behind these things as well. I think everybody buys into the supply-demand gap, and everybody buys into the fact that new producers will actually have to come in to fill that gap. But what you typically find is that it might take anything up to 10 years, between 5 and 10 years from a discovery through to actually mining itself. And I get a sense people looking at much shorter term money in areas where they can get a much quicker return than rather wait for that discovery to take place and wait for that mine to go into production and start actually producing dividends. I think a trend that I picked up when I was at the PDAC in just before the pandemic kind of came up is that majors seem to be getting more focused into exploration itself because they understand, of course, the supply-demand dynamics very well, but also because they can actually write their own checks in terms of their own exploration, and they're of course bound by their own rules. Those are more internal than those actually which investment companies have to adhere to when investing in junior companies. It's when you're investing in exploration stock, irrespective whether it's diamond or elsewhere, you're doing a number of things. You're banking on the team. The team knows what they're doing and they've got a successful record of discovery. Secondly, they're in the right area from a prospectivity perspective or a geological perspective. And then thirdly is that there is acceptable political risk in those countries in which you are operating. So my view is that the funding and the majors will gradually kind of catch up when that supply-demand gap becomes so wide, and then it will take some time to fill that, because obviously exploration, you can't go out and find a diamond deposit tomorrow and then turn on the mine next day. It's a fairly long, sophisticated process, which can give very, very good returns. It needs patience. So I think there will be a lag, to answer your question, in terms of funding behind the diamond exploration business.
Okay, I just wanted to throw something in, which is kind of like common sense thesis thought process that we're trying to go through. So if I'm looking at the macroeconomics of the world at the moment, I'm seeing more and more people in debt, more and more credit card, people getting, suffering from the high rates that they're being charged on credit cards, and they're having less and less money to spend on needs, let alone wants. So needs being obviously food, energy, home, travel, all of those wonderful things. And things like diamonds, that's just a luxury, which I feel that quite a few of the generation, behind me isn't going to be able to afford anymore. I mean, so how do you do your forecasting based on, what do you base the forecasting on?
Unlike many other markets, such as the gold, copper, coal, and other markets, where you can actually read about the price of that commodity in the newspaper, and it goes up and down, and it's very transparent. You can look at historical trends, try and forecast into the future, and although nobody's perfect, you get some kind of idea about the future itself. The diamond market is a very much a multi-tiered market. At the one end, at the very bottom end, you have very small diamonds, which are poor quality, which would basically feed the bottom end of the market itself. At the top end, you have large diamonds, large colored diamonds. And the difference in prices between these two is astronomical. This market here tends to be the ultra high net worth individuals, who of course would have lost money during this particular pandemic and with the drop off in the stock exchanges. But relative to what they actually have at the moment, it would be small. So if they choose to still buy a large pink diamond or a large type 2 white diamond, they will still buy one. So the volatility in this market in terms of pricing and in terms of demand is very different from this side, where exactly as you said, Matthew, people are going to put bread on the table, petrol in their car, pay their mortgages, etc. And luxuries such as a diamond, a holiday, a branded piece of jewelry or a handbag or something would all be subordinate to actually what are the real requirements. So this market here has dropped significantly in terms of diamond demand and diamond pricing. But also, interestingly as well, is synthetic diamonds, and maybe the greatest or largest example of that is the Lightbox initiative by De Beers, are also filling this segment, and these are coming in at a lower price because they're more readily available and they're not anywhere near as rare as the natural diamond. So what we are seeing, and it's no different if one looks at the sapphire industry, the pearl industry, and other luxury stones such as this, is you're seeing a multi-tiered market as such. Naturals, high-end goods here, focusing on one market, synthetic, low-end goods here, focusing on another market, and of course many other tiered markets actually in between.
So where's the money? Where do you make the money? I mean, the high-end coloured stones, I get that. They're the ones that, you know, hit the newspapers and people talk about, and the millions of dollars. And the lower end, where people, you know, got to choose between what they spend their money on or don't spend their money on, can be filled with, you know, costume jewelry or these lab-grown diamonds, which I think you're indicating are getting less and less valuable because they're not rare. But where do diamond companies like yourself try to position themselves? Because it's all under the ground. You don't know what you're going to find until you start doing the work. How do you work out where you can make money? Because I read about companies who find the odd big stone, and that's the thing that people talk about. But it's probably the hundreds of thousands of other stones that they find behind it will actually make them the money. Again, can you explain that to us? How does a diamond explorer, developer, producer survive? Assuming you're not one of the big guys.
We are a diamond explorer, and what we do is we look for what they call kimberlite pipes, and kimberlite pipes are basically extinct volcanoes that could have erupted anything from 15 to 20 million years ago to 1.5 billion years ago. So they're extinct, and they're solid, and they're carrot shaped, and that's what we look for. Obviously, we try and look for those which have diamonds in them. And what our focus is from a scientific perspective now, and it's a branch of science that is developing quite quickly, is how can you de-risk your diamond exploration techniques to try and only look for those which are producers of large or quality stones. And if I just kind of share with you a couple of stats which are quite interesting, is you have around just over 6,000 kimberlites in the world, of which 600 contain diamonds, of which 60 or thereabouts have been or are diamond mines. So from an exploration perspective, is we go into an area in which we know has diamond mines where they produce large or quality diamonds. And typically kimberlites occur in clusters. If I look at the Orapa cluster, for example, in northeast Botswana, you have approximately 60 kimberlites in that cluster, of which 6 are diamond mines or have been diamond mines, of which 2 produce large, high quality, valuable stones. So clearly that area is an area which is highly prospective for new discoveries. Whereas you can go into other areas, for example, in Southern Africa around the Finch mine, which is a very high-grade diamond producer, but it tends to produce smaller, poorer quality diamonds. So we tend to steer clear from that, although we may discover diamondiferous kimberlites, they will probably be of low value. It's a branch of science which we're working on right at the moment, and it's exactly what we discuss at a board level, is how can you short-circuit that to find something which will actually meet the long-term supply and demand.
Okay, so you are aiming for the top end at all times. That is where a company wants to progress to a point where it can position itself as identifying large or coloured stones. That's how you survive and how you get funded.
Well, that's how we survive is obviously in exploring in the areas which our shareholders believe that we are going to find something. Doing obviously, we say what we do what we say. That's really, really important. And importantly, that we show progress in terms of our exploration projects from nothing through to finding a kimberlite, through to recovering diamonds, and doing this as fast and as cheaply as we possibly can.
Got it.
And that's how investors come back in and fund us.
Well, let's get on to that. So I think you've given me a very good overview of the world, and the viewers an overview of the diamond arena in which you play. So let's talk about you. So you are an explorer, 3 million market cap. Let's just talk about some of the numbers first, so we understand sort of what you're dealing with. So how much money has been invested into the company to date?
The company has been going for about 7 years. I've been with the company 3.5 years. Mm-hmm. And our typical yearly cash burn, for want of a better number, and it varies from about £350,000 a year to about £1 million a year. And when we're spending the larger amount of money, it means that the level of activity, particularly the level of advanced activity, is very high. When we're spending the smaller amount of money, like we're obviously doing now because we can't do any field work for obvious reasons, we'll probably be going below £350,000 per annum, in that we're doing mainly desktop work and obviously doing all the compliance work in terms of keeping our licenses in good order, audit fees, stock exchange fees, etc. So our yearly cash burn, if one averages it out over the last 7 years, is round about £500,000 per annum. And much of that goes directly in the ground itself. That we don't have a corporate office. What you see behind me is my office in Irene in South Africa, where we manage our operations from here into South Africa, Botswana, and Zimbabwe. And we don't actually tend to have full-time employees. I'm the only full-time employee in Botswana Diamonds, and we tend to have campaigns on our exploration projects, of which we have 2 in Zimbabwe, 2 in Botswana, and 4 in South Africa. So we do campaigns on each of the projects as and when we see that the criteria are good to make an investment in them, and depending on the availability of funding.
Right. So you're saying to me the company has raised in total in 7 years £3.5 million. Got it. So how much?
I'll have to double check that exact number, but it'll be round about that number.
Okay. And how much cash are you sitting on today?
Well, we raised £350,000 in March of this year. Okay. And we were barely able to start our field programs before the pandemic started. So we're reasonably well cashed up at the moment. We've done all the things that other companies have done. That we're obviously not active at the moment, apart from desktop work. As soon as the lockdown is lifted, we'll continue with our field work. But we're very, very mindful of the fact that companies like ours tend to go back to the market once every year, twice every 18 months or thereabouts. So any funding environment we can't look at in the short term. So we've got to make our money last a hell of a lot longer, and we've put in measures to actually do that too as well.
Okay. Yeah, I mean, your share price saw a rise towards the end of last year, and then fell back down pretty quickly before Christmas. I mean, what was that caused by?
Well, we tend to issue between 12 and 18 news releases a year, all based on the work that we are doing. We announced the issuing of a mining permit on the project Marsfontein, which is immediately adjacent to a diamond mine which had a 3-day payback and a published 3-day payback on that. And our share price rose very fast actually on the back of that. And over the passage of time, it drifted downwards. Equally, last week, as your investors may see, that we announced the issuing of a number of new prospecting licenses and the renewal of old prospecting licenses in Botswana literally a day before they were locked down, and went under what everyone else is actually doing. But you saw our share price strongly reacted to that too as well. And I would imagine over the next couple of weeks, as we are unable to do any work, it would drift downwards. And once we're in a position to go back to do work and we make positive announcements on the back of that work, the share price will go back up again.
Yeah, okay. So, I mean, it's all relative in the sense you're £3 million companies, so therefore very little trading would have a positive or negative, a significant positive or negative effect on you with very little shares traded. I guess the bit I want to get into is for people looking from outside. Well, at Diamonds maybe for the first time, or they know Diamonds and they're looking at you, and it's a small company, it's exploration, therefore it's high risk by nature. What do you say to those people about what it is that you are trying to build out here, and how do you ensure that you can? Because you're 7 years in the making, right? So 7 years is a long time if you were a shareholder from day one. So I imagine a lot of the people who have been trading in and out of this, but the general trend after early 2016 is down. So how do you say to people, look, we have a better sense of what we've got under the ground now. We know where we're meant to be looking. We know what we're looking for. We think that it could be there. Here are the next steps that we are going to fund, and where we're going to spend time and effort to actually create a meaningful story which doesn't have an immediate drop off, like people cashing out or whatever it is that they're doing. Because at the moment, it's hard to see why I would come into your company. I want reasons to come in to invest in you, because I think I'm going to leave my money there for a year, 2 years, 3 years. I mean, what are you telling people?
I think there are a few things, Matthew, and I'm going to go back to the points I raised earlier. Firstly, you're backing a team. And the team that we have in Botswana Diamonds comes from the African Diamonds team, which was listed about 12 years ago and developed the AK6 deposit at that time, which has become the Karowe mine. And those original investors in that company made a 25 times return on their investment. And if you followed your rights actually all the way through, you would have made a 10 times return on that investment if you sold out round about the high. So the team in which we have has a track record of delivering diamond mines as well. The team also has worked in West Africa before, and some of the projects which we looked at under the guise of West African Diamonds are now being developed under Newfield Resources. So we do have that strong kind of track record of going into areas, being able to work with the political environment we have, being able to work with the geological environment and deliver things as such. So that's the first point. The second point is what we have in Botswana Diamonds is we have, from a geological perspective, we have the most prospective area on the planet being Southern Africa. And we have it from a political perspective, we have it de-risked to some extent in that you have Botswana on this side, which is seen as the Switzerland of Africa, very, very stable, rule of law is great. You have Zimbabwe here, which is gradually moving up this way following their democratic elections. And you've got South Africa in the middle. What we try and do in order to generate the shareholder value is we don't say we need £10 million for this particular project. What we do is we try and raise a small amount of money as possible to be able to progress a project and then raise money at a higher price once we've delivered on what that project has and what we put out to do. And of course, it is relatively easy to deliver on drill holes, samples, meters, all those kind of things, but we can never guarantee what the results would be. We can say that we're going to do it cheap and we're going to do it fast and we're going to stick to our budgets. And if we're in the right areas, what that will mean is that we will drill into a kimberlite like we did about 6 weeks ago. The share price will get out. So it's an opportunity for people who came in at one price to come out at another price. And typically what happens in stocks such as ourselves is that once we get to a point where we have discovered something significant, that is when we either, the larger institutions start to become interested in us, or larger diamond companies, like with African Diamonds, which was bought out by Lucara Diamond, tend to actually become interested in you, and it becomes a corporate action, which, of course, the shareholders do well out of. That's a kind of evaluation mindset.
Okay, so I mean, it's similar to any other commodity. Management team have to have been there and done that before and shown success and ability to create value. I get that. But with diamonds, because I don't know enough about them, there's not enough peer analysis done here for me to know what good looks like and what not so good looks like. So with Rockwell, I mean, what was the time period? You've spent 7 years so far. What was the time frame for Rockwell to go from beginning greenfield exploration through to actually starting to create some value? Because at $3 million, it's early stages, and I get that you're raising money in smaller increments to reduce dilution, to be able to get more information, to raise at higher rates and so forth. But that hasn't happened yet. Is there a bit of the management team which thinks, let's just raise a whole stack of money, gets us runway for the next 2 years, we can just focus on that and not run around trying to raise money all the time, and then come back to the market with something a bit more meaningful because we've got the money to deliver something a bit more meaningful? I mean, what's that arbitrage in terms of your decision making?
Okay, if I could answer your first part of the question, it was African Diamonds. Rockwell was a diamond producer. That was another company I was involved with.
African Diamonds.
But African Diamonds took 7 years or thereabouts from being listed on the London AIM market and the Botswana Stock Exchange to eventually being bought out by Lucara Diamond Corporation. And of course, there were many large spikes actually within it. If one goes back to the early stage, on the drilling and the discovery of fairly significant portions of diamonds from AK6 itself, is the share price went up a multiple of, I think it went up to £1.50 at one stage after being listed at 5p within its third year of life. So, and many people sold out actually on that itself. The second part of your question about why don't we just raise £10 million and be done with it is there's a very, very careful balance of not diluting your shareholders, keeping your original shareholders with you, and incrementally taking each of your projects up the value chain. If I go back to my comment about 6,000 kimberlites, of which 600 contain diamonds and 60 are mines, it is relatively easy to go and find a kimberlite. And the market likes it because it's a discovery. But the process to evaluate that kimberlite and to get a resource is much more complex. So with the projects we have, which we have in Zimbabwe, Botswana, and South Africa, you incrementally take those along the line. And the minute you believe that they're not going to actually work out, that it doesn't have possibly significant numbers of diamonds, or maybe it has too deep cover in order to make it a mine, you leave it and move on to another project within your kind of portfolio. So you don't want to say, I'm going to spend £10 million on one project, because that project you might take to a certain point and then actually stop it, because there's actually no point actually putting money into a project which doesn't have a commercial potential of being a mine. So it's that balance. And yes, we do raise money twice every 18 months or thereabouts, but we raise a relatively small amount of money for very defined project work. And we then, obviously I do the standard investor relations things, which are very, very important, but it doesn't become an all-consuming process to actually raise the money. So you actually take your eye off the ball in terms of doing what your investors have actually mandated you to do. And that's where we've got a very strong board, with our chairman and finance director and others who are very, very deeply experienced in terms of that balance of shareholder dilution, share price growth, and the volume or quantity of work that you would actually undertake.
Totally understand that, but I'd say like sometimes you got to get that arbitrage between moving quickly, getting scale, and conserving, cash and managing dilution. I understand that, and I just wonder if it was different in the world of diamonds than it was, say, in gold or copper, for instance. Because so you mentioned a word there which some people often forget, which is the evaluation stage, right? So people go from exploration straight into development, but they forget about the evaluating stage. So you found a kimberlite, one. So it's, I guess that's a bit risky if it's just one. But how do you, for the world of diamonds, evaluate a kimberlite? What's the process? How much time does it take? What are you looking for? What do you need to know before you make a decision that this could be economical?
Matthew, it's a very good question, because this is where there's a bit of a funding gap. Okay, we found a kimberlite, and the variables that we need to understand about it are its size. How many tons are there? That's number one. Number two is, what is the potential grade of the kimberlite? And we measure that not in grams per ton, like gold and others, but in terms of carats per 100 tons. And then the third variable, which distinguishes diamonds from all the other commodities, is the price of the diamonds themselves, the dollar per carat. You can have mining operations, for example, in the Arapa area, if I use that again as an example, where at the top end you've got Lucara's Karowe mine, which gives you an average value of north of $350 per carat, and you have other producers in the area which are south of $100 per carat, and that's based on your size and your quality of diamonds. So the first step after finding the kimberlite is to define what they call an inferred resource. And in order to get an inferred resource, you need to have sufficient confidence in your size, your grade, and your diamond value. And typically, you need to take a 500 carat sample, because this will give you the relative confidence at an inferred level to value your diamonds and get your grade. The next stage is an indicated resource, of which can then form part of a feasibility study or a preliminary economic assessment. And there you need to generate 5,000 carats of diamonds. And here is another departure maybe from other minerals, where if you're drilling for a gold deposit, you will send your core to a laboratory, and they will tell you what their grams per ton of gold is in it. And then you'll do your sophisticated geostatistics around that. For a diamond deposit, you typically need to actually build your own bulk sampling plant on the property, so you can actually recover the 500 carats. Because let's say that your kimberlite is running at 50 carats per 100 tons, as an example, you would need to take 1,000-ton bulk sample from the kimberlite itself to generate your 500 carats. So typically there is money available for your early stage exploration, which is relatively cheap to do your geophysical work, to do your drilling work. But as you can imagine from what I'm saying now, in order to take your bulk sample, you need to build a sampling plant, and you need to have your sampling plant actually on site, or you need to have a relationship with somebody who actually has a sampling plant. And that's exactly what we've got. So we don't want to go and raise money to go and build a bulk sampling plant, because once you've done your bulk sample, potentially that plant actually has no value. So the very first bulk sample we took from Thorney River in South Africa, we had processed at an independent sampling plant owned by another mining company. And then for the bulk sample that we've just taken now before the lockdown started, is safely in the yard of another mining contractor who has his own bulk sampling plant. And for this, he is being remunerated on 85% of the revenue of the diamonds itself. And so we have been, we're not taking any of the cost in terms of the plant, the mining and things like that. We're getting all the information we need from it, which is really important from a geological perspective. And there's that little cherry on the top that will generate some revenue from it too as well.
Very good. No, that's fascinating, because I'd never sort of I didn't understand the difference and the process, but some of it feels similar. But obviously, I guess the way you go about it, well, it makes sense. It makes sense to me. James, I mean, thank you so much for running through that. That's fascinating to me in terms of the macro component here. Can we just talk about what it is that you think you've got and what you think the timing is for the kind of next big event? Because again, I'm looking as an investor, looking in, I'm like going, is now the time to invest, or should I wait a year? Because you just raised a bit of money. I think you're suggesting that will keep you going for certainly the next 9-12 months or so. Is that about right? Yep.
That's good. Well, maybe not that long, depending on how quickly that we do our work post the lifting of the lockdown itself.
True. That's true. So why should maybe let you finish off and say, why should investors be looking at Botswana diamonds now as opposed to waiting to see what happens after your evaluation phase?
If I focus on our Botswana projects first, last week we announced the renewal of certain prospecting licenses and the addition of new licenses. We also mentioned in that press release that we're going to be drilling once we have the environmental management permit, and also obviously once the lockdown is lifted as such. And we're going to be drilling on high-grade geophysical targets which have kimberlitic minerals over the top of them. So we're going to be very likely drilling into kimberlites. Okay. So that is certainly going to be a newsworthy event. That's number one. Number two, also in Botswana, is we have a joint venture with a company called BCL, which is in liquidation, which has discovered some potentially high-grade kimberlites also in the Kalahari region. And the new liquidator of BCL, and BCL has got nothing to do with, the liquidation has got nothing to do with diamonds, by the way. It's due to a copper nickel project they had to the east of the country. The liquidator's making great progress with kind of unraveling the corporate morass there. And once that project, we are able to kind of release that, there's significant work and potential behind that. The third one I'd like to mention, and there's only four, is our Marsfontein and Thorny River projects in South Africa. We have taken a 100-ton bulk sample from there. It's currently in our mining contractor's yard. As soon as the lockdown is lifted, we'll process that sample and we'll release the results on this. This follows the successful drilling of kimberlite on the Marsfontein project some 3 or 4 weeks ago. And then number four, it's something that we've been working on very hard with our partner Vast Resources PLC in Zimbabwe, is our joint venture on the Marangi diamond field in the east of that country. Vast is obviously they're leading the negotiations and they're the major partner in this, but they put out a press release last week that the award of those tenements in Marangi is imminent. But obviously the Zimbabwean government is focusing very much on the pandemic at the moment. And then as soon as this pandemic has passed, however long that might be, and we all hope and pray it's going to be short, that license will be issued, and then we can rapidly go through the exploration through to trial mining hoop and start developing things. So those are the four projects we have, and we've got many more, but those are the four projects we're particularly focused on at the moment, and those are the four projects where there's likely to be strong news flow in the next 3 to 6 months.
Fantastic. On that 350k you raised recently, was that institutional, or was that raised by a broker, or was that one of your 3 Fs?
It was a number of the 3 Fs. We had a number of high net worth individuals, and then friends and families who came in to support us. Right.
Okay. That I guess. Do you think you guys have got the credibility because you've obviously worked at African Diamonds, etc. before? You've got the credibility when you need to go and raise a meaningful amount of money, in the next 18 months or so. Are you going to be able to walk into the city of London and people will be listening? Do you feel that?
Well, Matthew, our last fundraise at African Diamonds before we got bought out by Lucara Diamond was for £7.5 million. That was obviously raised through the typical kind of broker route in the City of London. And it was very well participated in a project which we all believe to actually have legs. And I see if we can demonstrate the significant commercial potential behind a project, we will be able to repeat the same thing again.
Good stuff. Good enough from me. Thank you very much for your time, sir. Thank you for the education. I really appreciated that piece. Stay in touch. I say, hope we get through this and you get on and do some work. And when you do, give us a call.
Thank you so much indeed for your time, Matthew, and all the best.